Hello and welcome back. This is Christopher Aaron. This is the iGold Advisor channel. It is March 13th, 2024. And last week we looked at the breakout that is unfolding right now in gold. Today we want to answer the question, what comes next? There have been several of these breakouts in the gold market above horizontal multi-year consolidations over the last 50 years that we have to refer to. And so we have a good roadmap for what should be coming here for gold in this cycle. So we're going to address that this week. And then in the future week coming up, we will revert back and look at silver next week. So make sure you hit the red subscribe button and the bell icon to be notified when these videos come out, or else you will miss the relevant information here on YouTube. Guys, if you want to give it a thumbs up, I super appreciate that. Helps out the channel a lot. Thank you for that. Last but not least, make sure to follow our X or Twitter feed at iGlobalGold, completely free. Sometimes I post quicker updates during the middle of the week over there that you can check out. Once again, absolutely for free. So let's get into what is going to be happening here for gold over the intermediate term, our legal disclaimer for one moment. Now let's look at it. We're talking about the new record highs. So just to rewind in your memory here, we were looking at point number 1 back in 2020, the first time that gold made this peak at 2,075. Point number 2 lining up quite closely. Point number 3 lining up quite closely, right? So you say, okay, clearly something is going on here with this level. Point number 4 right here, which failed to hold the breakout. So we can see exactly where the weekly closes came in there, where exactly the resistance was, basically right at the same points as 1, 2, and 3. And so that gave us our resistance zone here beneath the 2075 level. Then we have this underway right now, which looks like a breakout on our hands. Now, gold was weak today following the CPI figures. This is being recorded on Tuesday late at night, so it'll be Wednesday when you see this. Gold was weak following the inflation figures out of the United States. Here's what you have to remember about these inflation figures. So inflation came in hotter or higher, in other words, than what economists were expecting. When we talk about the regular CPI inflation and the core inflation, both figures came in higher inflation than the majority of the economists were expecting. And gold sold off, right? Now, on the surface level, this doesn't make any sense. It's sort of counterintuitive. Gold is lower the day that inflation is higher than economists expect. However, you have to remember that this is simply the paradigm that the market is in right now. Anytime there's high inflation, the market is taking this to mean that because of the high inflation, the Federal Reserve is therefore going to keep interest rates higher for longer, and therefore, with higher interest rates, gold is worth less. That's the logic of the market, or the illogic of the market. Remember, markets can stay irrational for very long periods of time. I believe there's going to come a moment at some point within the next several years where market participants begin to once again believe that high inflation, in fact, is going to mean even higher inflation in the future. We are not at that point yet. So let's go back to the gold chart here. We talk about the sell-off. Gold peaked at 2,190 yesterday before selling off to back below 2,160 today. So what should be coming next year for gold? We look at this very clear resistance zone, the breakout above 2,075. It looks like gold wants to come back down to the breakout point here. Why? Now, there's an old adage in technical analysis. Technical analysis is what we're doing exactly right here, which is just simply, yes, we talk about the fundamentals. Yes, we understand the fundamentals. But what matters ultimately, if you were to take a step back and look at yourself in the mirror and say, what do I really care about? I'm willing to wager that 9 out of 10 people, what they really care about is the price. What is the price going to do? Is the price going to go higher, lower, stay range bound? So we kind of cut through all of the fundamentals and say, why don't we just focus on the price? Why don't we analyze what the price is doing, since that's what most people care about? So here we are. There's an adage in technical analysis that says, once resistance is broken, it then turns into support. So what are we actually talking about here? This level around 2075, resistance, 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 broken. What the market is getting ready to do, and it would have found any reason to do this. It could have been the CPI inflation figures. It could have been a lessening of the intensity of the wars that are going on right now. Could have been any reason. The market is coming back right now. What? To retest the breakout here. The way to think about a retest, fundamentally speaking, is when a market comes back and it challenges whoever was buying right in here, whoever was buying at 2070, 2080, as gold was breaking out. Some of those people will take their profits here. It's only logical to understand that some traders will take profits, especially when gold has spiked over $150 in just a few weeks. They take their profits, gold sells back down, and then what? All things considered, we would expect whoever those buyers were in here, they didn't all get a chance to buy. And because they didn't all get a chance to buy at the level that they wanted to here, we would expect the market to once again see those participants come into the market and buy again. And for this former resistance level to therefore turn into support. This is why this type of thing happens, and this is how it happens. This is how you're going to see it on the chart. So we're at 2,150. I believe the retest is going to be coming here over the next 1 to 2 weeks. And gold should fall back plus or minus a few dollars, plus or minus $10 or $20 on each side to this 2,075 figure. It's right here from point number 1, matching points 2 and 3. So gold should be coming back to that as long as we do not witness 2 weekly closes in a row below 2,075, then this is going to represent a successful retest. Gold should base here, it should bottom here, and then it should begin for its next cycle higher. Now, after gold bottoms here on the retest at 2,075, I'm going to tell you we have a very good roadmap for what gold should be doing after that point, but I am not going to reveal that here in this video. I've given you the next step, and the next 2 steps beyond this will be going out to our premium subscribers today. That video goes out late on Wednesday night, U.S. time, West Coast Pacific time. After the retest here, I will tell you what, a lot of people are going to get tricked by this because they think gold is just going to immediately continue higher. We have a different roadmap based on the statistics of the previous 2 cycles. Once again, that step 2 and 3 will be going out to our premium members later today. So I just want to remind you of one thing in addition. If you say, well, is this technical analysis really useful? Can we rely on this? Go back into the member archives and look at when I started this channel. I have not deleted a single video since this channel started. You want to know where it was? Right here. August of 2015. Now, look, I didn't catch the exact bottom, right? But gold had been moving lower for almost 5 years at this point. Gold was all the way up near 2,000 back in 2011. It had moved all the way down. And I was looking at a host of technical signals back in 2015 to tell me that gold was getting close to bottoming. So we got pretty close to the bottom here by about $30 compared to the actual low at 1,045. If you don't believe me, go back and look at the member archives here of the YouTube channel, and you'll see the analysis that I was presenting at that time saying that gold was going to bottom here later this year. So here we are with the breakout. This is the power. Imagine if you had been watching this channel back in 2015. you would have been backing up the boat in late 2015, early 2016. The good news is you haven't completely missed your opportunity, even though gold is already doubled from where it was back when we started publishing. It looks like there's still one more good run to come, but once again, it's not going to come how most people think it is. There's going to be a major twist that happens here after this bottom. So get ready for it. If you like the type of analysis that you've seen here today, you should know that we publish every week for our premium members, but much more depth than you're seeing here. We cover not only the next one step, but the next 2 to 3 steps, not only for physical gold, but also for physical silver, and then for the gold and silver mining sector. These videos also feature expanded coverage now of Bitcoin, the US stock market, the currency markets, and other commodities, including oil, natural gas, and copper. You also get the exact open market buy and sell signals that we are making here the moment that we release those decisions. That goes right to you by flash update to your inbox the moment that we make those decisions. You cannot afford to be without updated technical analysis. Once again, I do not always have the chance to post here on YouTube every single week. So make sure to check out Precious Metals Intelligence Plus to get the latest on the technical action. If you are a higher net worth investor, you have to understand the power of private placements. When we do these private placements, we buy similar gold and silver mining companies that we buy here in Precious Metals Intelligence Plus, but we get better terms on them. So if the shares are trading at 20 cents, we can often buy at 17 or 18 cents, a big discount. And we also get free, yes, free warrants with every single investment that we make. And remember, the warrants get you nearly twice as much upside for the exact same companies as you would get here. It's just you have to be a higher net worth investor that can commit the minimum of approximately $7,000 per investment. You will also get a free subscription to our flagship Precious Metals Intelligence Plus when you join us in Elite Private Placements. So if you're a higher net worth investor, you've really got to understand the power of this setup here and what you could achieve by these warrants and the discounted shares. If you would like to speak to me one-on-one, Christopher Aaron, you know that you can reach me on the consultations tab of our website. I sit down with complete beginners in this sector, people who have never purchased a single ounce of gold or silver ever, and they just want to make sure they haven't, bought the wrong gold coin or the wrong silver coin. Trust me, some of those dealerships out there will try to sell you gold and silver coins that are twice as expensive for the same ounce of gold. And I see investors getting taken advantage of all the time. So I do not take kickbacks from any of the dealerships or fees from any of the companies that we research here. I am 100% independent and supported by investors just like you who want a researched, independent perspective. I also work with individuals who have multi-million-dollar portfolios, and they want to understand some of the benefits of diversifying across the precious metal sector, not only the physical metal, not only the ETF funds that are available, but also the differences between the large cap mining sector and the private placements that we do. If you would like to build a diversified precious metals portfolio, know that I can provide you with the highest level of independent analysis that we have here, and that goes to you in our 30 or 60-minute consultations. You are free to book them at your leisure. Thank you for tuning in this week. We should have the retest setting up in gold. 2,075 plus or minus a few dollars is the figure to watch. And then we start the next cycle higher. However, there's going to be one big twist in the next cycle that I think is going to throw a lot of people off. So be very careful.